Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money on the internet. Loaded up for discussion today, we have ApeCoin doubling up in price to $1.40. ApeChain is now live. We'll do a little bit of a breakdown on what has been happening over there, what you're missing out on, or what you've been participating, hopefully. Solana does more volume than the entire Ethereum ecosystem on Sunday. Definitely want some interesting details and data on that. We've got those to share with you in just a little bit. And finally, Stripe $1 billion acquisition of stablecoin platform Bridge. That is pretty exciting stuff. We've also got the latest on price action in crypto and NFTs and a discussion on Blob pricing, which is a big topic of debate in the Ethereum community. You want to understand it if you want to figure out how these ecosystems are moving forward. So we've got that for you in just a little bit. Stay tuned for that. We've got today Sammy and Brad in the co-host seats. We're ready to get into it. But just a reminder, friends, before we do that, nothing that we say here is financial advice because unfortunately we do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Sammy, it is Monday. It is the 21st of October. How are you doing? How are you feeling?
I'm good. I thought I'd have a restful weekend, but then saw ApeChain launch, so I just couldn't resist getting stuck in. Might have bought the top on a few of those shitters, but you know, that's for scars.
Unsurprising. Was there any part of you when you saw the launch, you thought, I want a restful weekend. I'm just going to have a restful weekend. I'm going to ignore it. How long did you even resist?
Well, the only reason I resisted was because I woke up and it launched in the middle of the night our time. So like it had already gone like 6 hours. So I missed the early market cap. So I thought I'd be exit liquidity on some. So I was trying to find some that hadn't breached that 144k chasm to go from Ape Express to Camelot, which is the DEX on that. So yeah, it's been an interesting ride. I think I'm down overall, but things are resurging a little bit. So we'll see.
Well, I was just telling you beforehand, depending on when you bought Ape to participate, even if you lose money because Ape has pumped so hard, there might be a chance that you make money if Ape keeps moving up, so long as you've actually sold something into Ape and realized some of those losses already. Look, we're going to dive into all of that in way more detail in a little bit. This is just to start off. Brad, how are you doing? Were you tempted? Were you tempted by the new degenerate games created for the apes on ApeChain?
No, just so where my attention goes, I had no, like, not even the slightest inclination to actually go into the chain. My immediate thing was like, ooh, what does their technical stack look like? What are they using for data availability? Like, just all this stuff that does not matter for anyone who wants money in this industry, but it's something that I'm fascinated with. So I started breaking down like the actual structure of the chain and stuff. So like that,
and you started fudding it out of the gate.
My brain, I did. As a man of the tech, you know, it didn't resonate with me. Doesn't mean it won't resonate with other people, but yeah.
Okay, well, that's interesting. And I do think people will be interested to hear your fuller take on that. Why you may not have been entirely impressed with ApeChain at the beginning. There are some interesting things to talk about there, as well as maybe tying it into this outrageous volume on Solana, which took place over the weekend, so much so that it eclipsed not just Ethereum mainnet, but all of the Ethereum L2 ecosystems combined. So there's definitely a bigger discussion to have there, which we will have on today's show. But as always, let's get into the headlines to get you up to speed. We'll start with the price action as always, and then we'll get into the headlines. I'm going to share my screen for the people who are watching in. Remember, we're live on X video, live on YouTube too. You might be appreciating our new background. If you are watching in, gone for a little purpley blue. That's the change we've decided to make. The rebranding is continuing to roll out over time, but let's get into it. Bitcoin is at 68.5K. I think we went just above 69K in the last 24 hours, and we retraced from there. ETH is up a couple of percent at 2.7K, and Solana is up almost 5% at almost $170. That sounds quite enjoyable to say. Haven't seen Solana there for a while. Getting into the headlines, as we said, ApeCoin doubles in price to $1.40 with FDV at now 1.5 billion. It might be actually higher now compared to when I wrote this. Let me just check to get you the live price. It's 174, so it's up 25% in the last 24 hours. When I wrote the snapshot just a couple of hours ago, it was at $1.50. Now it's at $1.74. So yes, ApeChain went live. There were a bunch of memes that kind of became early leaders. Something like Curtis went up to a $23 million market cap, went as high as 30. Board was at 11 or 12 million. Sif went to about 5 mil as well. Those have heavily retraced in the last 24 hours. I think everything's like 50% down from those numbers. But we'll get into that a little bit more in a second. Solana does more volume than the entire Ethereum ecosystem on Sunday. We'll dive into the DeFi metrics there in just a moment. And finally, Stripe $1 billion acquisition of the platform Bridge. This is the payment company Stripe acquiring the stablecoin platform Bridge for $1.1 billion. Bridge provides software that helps businesses accept stablecoin payments, marking an expansion of Stripe's cryptocurrency adoption efforts. Bridge is Stripe's largest acquisition to date and may also be the largest acquisition in the history of the crypto industry. This is reported by Wu Blockchain. So we'll have a bit of a thought on that a little bit later too. Notable sales from around the space: CryptoPunk Nerd Glasses selling for 35 ETH. Bond Bear Chain NFTs, I saw 2 selling for 28 ETH. And a Bored Ape Multicolor Grin sold for 16.58 ETH. In general, there was a move, if we think about the NFT market now, there was a move in Bored Apes as ApeChain was kind of going live. They're up 20% on 7 days. They're up to a 13.2 ETH floor, which is pretty nice activity there. Pudgy Penguins still just below 10 ETH at 9.4. Milady's up to around 5 ETH floor. Azuki's still just hovering above 5. Mutant Apes not really catching the same bid in the same way. It's still back to above 2 ETH in the Bored Ape ecosystem. A few more things from around the space. Murad's NFTs like Sproto's up 14%, Project Eon's up 40%, Mog Aura's up 20%, but they had also retraced quite a lot as well, so maybe not as much up on the 7 day. So those are the things going on the NFT side. A few more bits of news from around the space to get you up to speed. We've got the AI coin GOAT tumbling from a $400 million market cap to under $200 million. This is on news that the account started tweeting the wrong spelling things, which made people believe that it wasn't actually an AI, because AI wouldn't be able to make these types of mistakes. So pretty crazy stuff there. Pump Fund plans to launch token according to an announcement on X Spaces. Tether's USDT market cap surpasses 120 billion. We've talked about stablecoins. The market cap just keeps going up. Top Trader launches on ApeChain, which is a competitive trading simulation game. So that is live now. I think you only need 10 ape to enter each tournament, and it's not with real money. So you're kind of playing synthetically. A couple of bits of news on the art side. Big sales. APE Piano Blossoms sale on Avant Art raised $290,000 across 5 one-of-ones. Pretty huge sales for ACK. And Ripcash also sold 64 editions of Birds for a total raise of 26.9 ETH. They sold those yesterday in a quite stealthy first come, first serve manner. So that is the Web3 roundup. Before we get into the main headlines and the discussion points today, any bits of news taking your interest, Brad? Saw you laughing at some point during the Web3 roundup. What's got you chuckling?
I'm trying to think of. I was trying to quickly do a meme of it. I don't have time, but it's just the goat story of the typo that's like said it. It just made me picture in my head the like 3 a.m. in the club, everyone's dancing and having a great time. Lights come on. It's just this thing does a typo and like, oh my god, maybe this thing is a fucking human, and then everyone just gets the fuck out. Like it's the nightmare situation. You realize the girl you've been dancing with for the last 2 hours is actually just not someone who you would traditionally be hanging out with. I don't know. It's just kind of hilarious.
Yeah, there's this funny situation happening over the weekend, right? Where I think at one point people were saying, which way round is it? At some point in time, people were going to be like AIs would be pretending to be human. That's like the thing that AIs need to try to do, right? The challenge for AIs is to pass the Turing test and present themselves as humans. Now we're going in the reverse situation where like humans are trying to pretend to be AIs in order to grift some type of coin. And now I don't know the veracity of any of this stuff, by the way, but there's definitely people thinking in their head, should we just pretend to be AIs to get on top of this meta, right?
Yeah, and my understanding of this one specifically is that like the AI is constantly spitting out stuff, and then this guy, the curator, the creator, is actually taking certain ones that are spit out by the end of Twitter, right? So it's not just like organic all the time, whatever. It is learning from what Twitter is doing, but it's not just like it's not unfiltered totally. So seeing that is what like people are like, wait, this guy is not only copy pasting his stuff in there, he's also manipulating, writing his own. It's like it's basically just a dude, and like that spooked a lot of people. But like, yeah, AI's like these models are predictive, right? So it's always saying it's always trying to predict the next letter that it thinks it's supposed to be predicting or like supposed to be using. And if the input is a bunch of garbage, it's going to try to predict garbage because that's what it's used to, kind of thing. So totally possible to have typos.
I like it. Sam, is there any chance that the AI is so sentient that it's trying to throw people off, knowing what how we were going to react, shake out the unbelievers with a few typos, and then it's going to run it up back with perfect AI sentience?
Well, I think, I mean, it is running it back now. So I think it dipped down to below 150 mil market cap, and it's now back above 370 mil. So in the past few hours, it's just completely done a U-turn. So Goatsy's on the way back up. But I do think that I have reason to believe that the X account, so Truth Terminal, is AI to like a majority degree. I don't know to what extent there's human interaction or what they can actually do, but I do believe that a lot of these beta plays are just like people pretending to be AI, and I don't trust them, and that's why I haven't even entertained a lot of these other ones.
Yeah, I think it's really cool. Do you know what it reminds me of? I mean, people talk about AI being a really important thing now, but Botto, as the the primary AI decentralized art project, it's like, sure, it's not perfectly decentralized. It's not entirely done by AI in the sense that I believe the way it happens is Botto is this AI decentralized art project. It's constantly learning different on the history of art, and then you kind of but the holders of the token kind of nudge it and start voting on what direction you think the next season should go on, which pieces should be selected out of all the things that you selected. So it's kind of what Brad suggested, which is like, look, maybe this AI is producing loads of stuff all the time, and then there's some human curation of the output. And I think that's exactly how Botto works. And if you look at Botto's kind of output so far, is really, really cool. It isn't AI generated art, but there's humans kind of who are participating in the DAO, just nudging it towards this particular aesthetic for the next season. So it's really, really interesting. And I think the people who enjoy Botto really, really enjoy it. And actually the price action kind of shows that people think it's a really interesting novel concept because those one of ones still sell very, very healthily, multiple ETH all the time. And they're actually doing a auction. I think it's at Sotheby's or Christie's at the moment, where they're going to market there. So very, very interesting stuff. Again, before we go into the main headlines, any other bits from the roundup that's kind of taking your attention? What do you think of the Top Trader game, Sammy?
I haven't actually played it yet. So because it went live late last night for us, and I haven't had time this morning to play it. But the concept I really like. You basically pay like 10 APE, which is like what, $15, $17, to enter this competition. You can, the minimum you can do is 100x leverage on specific coins, and then the maximum is 1000x. And there's basically a leaderboard. So I can see how people would participate, and it's a low entry. And I think the stuff with like fancy tactics, it being like a cheaper entry into playing that game, like a lot of participation has kind of resulted from that. And I think it's just a fun, affordable way for people to spend their ape and kind of contribute to a community style thing. And we've seen that with Packbot as well. They've got a trading competition that's similar, and that's on Blast, and that's done, or it's doing reasonably well. There's quite a few people participating in that. So I can definitely see how them kind of having this like actual use case for the ape token that they can actually spend it on makes a lot of sense. And we recently saw about additional funding. So ApeCoin actually responded and said, oh, there's been a 3 or 4 million grant pumped into Ape Express, which is separate from this trading competition. But it's just interesting to see that and potentially see more liquidity flow over that way, or more innovation come out of these tools. So I think it's a good start. They'll need to do stuff to sustain that attention, but it's a good start to make that progress.
Yeah, I like it. Appreciate the explanation there. I think let's just get into the ape section because we'll do the discussion points. We'll do the other headlines a bit after. You raised some good points just to set people up again for like what happened over the weekend before we get into the nuts and bolts of the price action on ape and maybe some of Bread's reservations. Um, so the core bits of news, if I give you some of the data here. So Ape has basically gone on an absolute tear. If you look at the chart, which I'm showing on screen, it's now up to 174. It's up 25% in the last 24 hours, but it was down at Ape was sitting at 74 cents. Like on two nights ago, it was at 74 cents, up to 174 now. Clearly showing some demand for the token. And so obviously the way that this chain maybe operates differently is that you actually need Ape as the base currency instead of ETH. So this has clearly required a lot of people to go and buy Ape itself. Just to give you some more background of what people were maybe using the Ape for, is it appeared to be the case that everyone had gone to this website called Ape Express and we're playing around on some of the memes there. So what you can see on the screen here is a pump fund style website where there are constantly new memes being made, and then you can kind of scroll through and see how far away different memes are to becoming created officially, and you can see which ones have passed and how they're trading. And then you've got this one at the top called King of the Jungle, which is, I guess, the one that's being traded the most as you speak. So this is where people were playing around. This was Curtis, the meme coin, which had ran as high as 30 million market cap in the, maybe on Sunday morning, I think. Now retraced to around 16 million market cap, but went as low as 10. So it's kind of bounced back as well, more than 50% from its lows. So this is the primary thing I think people were doing, at least at the beginning. And then, as Sam said, this top trader game went live, which the details of these are going to be ongoing daily tournaments. The entry to each tournament is 10 ape. You start with 10,000 USDN, which is an in-game currency. Remember, you don't have to put up your own money for these trading tournaments. Your entry is your 10 ape coins, and you don't use your own money. It's like a synthetic game. You trade the top 50 coins and meme coins. Your minimum leverage is 100x, and your maximum leverage is 1000x. And if you get liquidated, don't worry, you can rebuy at any point during the tournament. So if you were going to take this very seriously, you could see how people would have to continue to rebuy and use Ape to continuously participate. The top trader will get 50% of the prize pool. So that is what people are playing for. That is how ApeChain kind of played out over the weekend. Brett, going to come to you here first, because Sam kind of already explained what he was up to with it and some of the things he was doing. What was your reservation about ApeChain? You came out quite quickly to share a post. I think it'd be helpful to have that discussion.
Yeah, honestly, so the thing that you brought up initially, Ape pumping, Ape being required for the chain, that's one of my immediate reservations. It's the requirement for a native asset that people maybe don't want exposure to ultimately get exposure to the ecosystem. So like me as a participant outside of things, maybe I want to play on ApeChain, which is in the Ethereum ecosystem, whatever, but maybe I don't want to be a part of Ape because like I think it's not an asset I want exposure to. I just want to go play on the actual chain itself. Well, now I have to be forced to go through Ape. Okay, not great. The name itself, ApeChain, like I feel like that's more. It's hard to induce other participants from outside the ecosystem to come in and contribute. Now, whenever I said this here, Captain and Co came up and mentioned a few teams that were participating. Zed Run, Chimpers, they're deploying applications on the chain. I still just think it is so synonymous with the big brand that you're not going to want to, like me, as someone in the ecosystem, I see this and I go, okay, that's a bored ApeChain. I know Ape can be synonymous with just someone aping, but everyone sees this and they think that is bored apes. At least that's what my first reaction is, which means it's shared. So I don't want to contribute to that because now I feel like I'm kind of like subservient to, like, a broader brand, right? It's not an agnostic thing. There's some opinionation there. So like, and then you see like meme coins and stuff, everything in there is ape branded. It's all ape, intra ape stuff contributing. So there's those two things. And then the native yield, like there's no, like native yield's cool, awesome. I don't think it in and of itself is enough to attract unique builders to want to contribute to the chain, right? Like, okay, cool, we get a little bit of native yield that's already going on Blast. Okay, Blast also has gas rebates. Then you have some of these other ecosystems that are doing things like taking sequencer revenue or MEV opportunities, taking some of that stuff and funding application teams with it. So creating like a circular economy with that. And you're starting to see a few chains experiment with like the VE model where the chain earns revenue and then people have to have assets from the chain. So it's Mode for Mode Network, or Unichain is another one that's actually doing something similar. And with those assets, it gives you rights to either direct rewards or earn rewards. So like it creates a little bit of a circular economy and velocity within the ecosystem. Ultimately, though, like it just, on a technical perspective, there wasn't enough differentiating it from the 120 other launched L whatevers out there to appeal to me to want to come over there. And I pointed out DGen in my post. DGen was something, and I will totally admit that DGen is not as strong of a brand as Yuga and or Bored Ape, right? Awesome, which is why they got Chippers. That's why they got Zed. That's why they got all the other companies. But I ultimately think it's going to run the same course where everyone floods over there. It takes a long time to build up an ecosystem. It takes a long time to ship code. It takes a long time to cultivate community, which they have a little bit of that already, which is good. But things will run up. You'll get the DGen tools. You'll get the stuff like the launch pads, the dexes, the whatever. It's going to be extra fucky because you have like everything's denominated in ape paired with whatever. So now you have a volatile asset on both sides of these pools instead of just like Ethereum or whatever. So like I was part of the DGen launch and I saw a lot of teams trying to spin this stuff up, and then bridges are all fucked up. Like the infrastructure's not there. It's kind of annoying. Like, yeah, that's so. Basically, that was my overall take. It's just it's not appealing enough as an ecosystem to draw someone like me in.
Okay, I think there's a variety of reasonable takes there. There was a couple where I might push back, but I wanted to give Sam the opportunity to come back with one aspect, maybe trying to take the other side, share some other information, which you've got in a tweet here. Then I'll come in with my thoughts.
Yeah, I mean, I do agree with Brad to an extent, but I guess the question or the challenge I have is like, do they need you as a participant? Are they targeting people who are in like the Bored Ape ecosystem and they want to capture that value in terms of transacting on their particular chain? So I think Raheem made a post yesterday mentioning that there's about 400 businesses under the BA, the Bored Ape sort of IP. So if you've got all these businesses that are building out and they want to have various like applications on chain, why wouldn't they just have it on the ApeChain? And then it could be a self-sustaining ecosystem for that alone. And it's never, I agree, it's never going to get to the size of, I don't know, Base or some of these other bigger L2s or even L1s that could kind of garner the institutional capital. But I think it could be a self-sustaining ecosystem on a standalone basis, just with these individual businesses that are under that banner.
So yeah, I guess defining what success means is ultimately important here, right? Because you don't have to be the biggest and the baddest to be considered a success. What you pointed out was that like all these Bored Ape centric people contribute to it. That was kind of part of my critique, is because it's almost isolationist, right? So like everyone's taking their ball and going to live on an island like that. Like you're cutting yourself away from the broader crypto ecosystem, and like, oh, now we have all these Bored Ape people that can deliver all these products. But the opportunity was there across, again, these 140 other L whatevers and alt L1s, but no one spun up like successful products in those contexts either. But now all of a sudden everyone's going to materialize these fucking great things, which, you know, again, it doesn't have to be world beating, but yeah.
Do you think like, I mean, ultimately you need to have like a core community first to then make that success. And I use Pudgy as an example, and obviously they've got Abstract, but they have a really strong community that they've used as like a core like foundation to then build on. And then they've built out with plushies and kind of grown it from that standpoint. And I think Yuga has that similar potential where they can effectively have this core strong community, and then they can probably work out ways to expand it at a later stage. But I think a lot of these L2s that have come to market without that core community just seem to be ghost towns in terms of infrastructure. I'm not going to name names, but I think like there are some out there that I farmed and then just haven't used since. And I think there's a lot of that going around. Sorry, be gone.
Definitely, yes, definitely a bull case for it.
Yeah, it's like they've got this starting community. One interesting comparison, actually, before I come back with my main point, it'll be a very, very interesting comparison. You said, how pudgies have abstract, and there does seem to be a bigger attempt on their part to distinguish between penguins and the chain, because I do think Bread's comment is legitimate, which is if this is the ape chain, and I can see how there's some appeal to maybe broader people, the tie between the brand and the NFT collection is like pretty close. Whereas, you have pudgy penguins. I think I think it's fair to say they've made a concerted effort to not necessarily distance themselves from pudgy penguins. Like they're obviously embracing it in loads and loads of ways, but the branding and everything else about it is maybe sufficiently distinguished from the NFT collection itself. So I think people are aware of the point that you just made, which is this like a all-inclusive, let's get all the other NFT collections to come with us, or is this primarily for like is it kind of ape supremacy in some way, and that IP itself will be held to the highest in the highest position? But I take the other point, which is, as you said, chimpers are going on there, and but chimpers are going on via Reboot, which is Pixel Vault's gaming ecosystem. So I think there are other people who are very, very happy to align with, and I've spoke about this a long time ago on the show, where I said I think ultimately there will be teams, and chimpers, I don't think it's uh, uh, confidential to say, like, they don't want to do a token. Like they've kind of been clear, like, look, this is an NFT community. We're coming together to produce, we want to be a community. We're doing cool stuff, but we're not going to drop this token. And there'll be lots and lots of teams out there who don't want to do the token themselves, and they want to rather feed into other people's ecosystems with tokens. And I think what will end up happening in this circumstance is you'll look at the various teams who have tokens out there, and rather than putting all that pressure on yourself and needing to raise and have VCs and do your token design and negotiate with centralized exchanges, you'll look at the ones already out there, be like, how can I integrate into your team? Which one aligns most with us? That's where I think this will be going for a lot of other people who have communities as well. Brett, curious what your responses there.
I actually thought that was Blast's opportunity that they fumbled. I thought Blast had because it was the underlying infrastructure to NFTs, it had the opportunity to pull in NFTs to its specific chain, because everyone has to migrate at some point, get away from Ethereum, because Ethereum is not the long-term destination. Right, it's part of the roadmap. So everyone is kind of waiting for a chain to signal this is the place to go to. Now I think Pudgies is the leader for that, or showing to be the leader for that. It's okay, we're going to be going somewhere and people can come here, and it's the cultural bridge to an L2, as opposed to the literal bridges that are spun up. And but yeah, Blast didn't capture that. I thought they could have done something unique with the native yield and maybe honoring royalties as an NFT marketplace and all this stuff, but they ultimately didn't do any of it. So yeah.
Interesting. Look, I think we're in for a really titanic battle, actually, for the rest of 2024 and 2025 when it comes to L2s, but then also with these IPs that are launching L2s, trying to capture more attention and people to come over to their island. You talked about it as an island, the tug of war that's going to happen is going to be pretty fun to see. So we will be reporting on all of that.
I don't think it'll be close.
You don't think it'll be close?
Are we doing left and right? Red corner is Pudgies, right corner is Ape?
Can do.
Is that the... Yeah. Okay. Yeah.
Well, I think there'll be multiple. I framed it as a tug of war, but I think there's multiple people who will be tugging, not just from the IP perspective, but various L2s. As you said, there's so many that are launching all the time. So
yeah, for sure.
Okay, look, because we're talking about the L2 stuff, I think it makes sense to get into the Blob conversation, Brad, because this is a bit technical, but also very important for people to understand on how the Ethereum ecosystem is developing and why it might be developing in the way that it is. Then we'll get into the Solana conversation, which I guess in some ways is a conversation in opposition to the L2 conversation, because L2s are kind of competing with Solana, trying to be faster. And then we'll get into the Stripe news, which Sammy's going to break down, the $1 billion acquisition of Bridge, which is pretty significant. So, Brad, take it away. What have you got for us on Blob pricing?
Yeah, this might be a good segue for Ethereum ecosystem, then over to Solana. So, okay, so what we're going to talk about today, and we're working on a name for this, Bread Tech Breakdowns. I think maybe that's what we'll go with, but I'm going to step into some technical side of crypto, try to bring forth some technical arguments and data, making them digestible for everyone. And today's topic, yes, Ethereum block pricing, and what should be done with it to capture value for Ethereum. Like, that's ultimately the question: is how do you capture value with these things? So, zooming out a little bit, high level, what are blobs? They're additional data space that was included in Ethereum blocks back in Dencun, which was March 13th of last year. It's the time, you guys might remember, when everything on the L2s got way cheaper. And the reason that got cheaper is because there's just like a little sidecar attached to Ethereum blocks now that allows for all these L2s to put all their transactions into this block. It's super cheap. It's not the same as regular block space. And it drove prices down considerably because it's not as expensive as like normal block space for Ethereum. So, okay, so we have the blocks, we have this extra block space called blobs. That's where all these L2s stuffed in all their information. Therefore, everything is cheaper because of that. Up until this point, because this was a net new asset, right? It's this new area that was opened up in Ethereum. The demand for it, because there's not a whole lot of L2s, although we talk about there's a lot, there's hundreds, but we're going to need thousands to fill up this blob space. And functionally, all of these L2s have been getting free data, right? They're posting stuff down to Ethereum. They're no longer doing it in the expensive portion. They're doing it in the cheap portion. And it's basically been free. That's why you see these charts coming out where it's like, oh, Base has generated $200 gajillion in fees, but they're only paying back to Ethereum 27 cents. It's because all of the stuff that they're generating, they compress it and they put it back on Ethereum in this very, very cheap sidecar that you guys as users don't have access to. It's only L2s currently that have access to this. And that's why that's going on. So, okay, now there's a little bit of a push-pull. It's been going on since, again, I said March, 7 months now. What should be done with this block space? Do we wait for it to saturate to the point where it actually becomes expensive, just like normal block space? Or do we view it as something that we need to continue to expand? Because if you don't expand it fast enough, L2s will move away from it entirely because it's not big enough for them to continue to put their stuff in. So that's the side. Like, do you want it to be super cheap forever and get the network effects, or do you drive up the price from it to get some artificial Ethereum burn? And we have two camps for this. So the ultrasound money people said, we want Ethereum burn. They say, jack up the prices, make it more expensive, drive costs to L2s. And then you have the other side of the argument, which is saying, keep it cheap, continue to expand it. We have an update coming in like 2 months. And we want to grow that space, because if we grow that space, that means more L2s that can use it. They all have to use Ethereum. That means the network effects of ETH, the moneyness of ETH continues to grow, even though there is no burn associated to it. So it's like, what is more valuable, right? Is it the direct burn, the deflationary pressure of the burn on one side? And again, that's ultrasound enjoyers that enjoy that. Or is it the people that, or is it the getting ETH into the hands of more people through this cheap block space? And on that side, you have like Sassel or David Hoffman from Bankless, totally even from Solana, says that once that is saturated, you're actually could be viewed as a downtime in traditional markets. The problem is with this expansion of the block space to make sure that it's cheap for everyone, that network effects come, you actually have some headwinds, which is higher bandwidth requirements of the actual network, which means you need the solo stakers are in jeopardy. People who have low internet connections maybe can't be nodes in the network. So you're sacrificing slightly decentralization of the network, you could say. So there's a big push-pull going back and forth. Obviously, there is no answer. Personally, I think blobs themselves should be viewed as a loss leader, so that you can, and I say this because L2s are businesses, and L2s have the optionality to use blobs on Ethereum, or if that gets too expensive or is not sufficient for them, or it is straight up is not big enough for them for all the data that they need to compress, they can go use an EigenDA, or they can go use Celestia, or they can go use an alt layer. All of these alternative data availability layers that would ultimately make them cheaper and give them faster throughput, make transactions cheaper for the users. There's a lot of incentives to use that stuff, but it's not quote unquote aligned with Ethereum. So because that setup is there, I think the Ethereum should prioritize growing blob space so that L2s like Base, because Base is creating towards expanding their stuff, should continue to use Ethereum. It gets more ETH into the hands of more people. It aligns more of these bigger networks with Ethereum as a whole, even if it doesn't lead to direct ultrasound moneyness. But there is no correct answer, and the war is raging.
Got it. Fantastic breakdown there of what's going on with blob pricing bread. Maybe a follow-up question from me, because this is like super educational. I think it's really important to understand the development that's going on here. Do you think the reason why it sounds like you're in favor, so you are in favor of maybe subsidizing the proliferation of L2s by keeping the blob space cheap so that it's, you know, really, really in their economic interest to make L2s? Like, well, look, there's a great deal on the table for us. We can make a lot of money by doing this. We will keep proliferating Ethereum by creating more L2s. Why do you think the people on the other side would prefer to prioritize the burn? We've spoken about this a little bit when it comes to Bitcoin, for example. Is it because, you know, ultimately the problem with the traditional monetary system, or the way that people perceive the problem in the traditional monetary system, is that the money just keeps inflating. It just keeps getting bigger. And that is seen as a big problem, especially when not managed appropriately. Bitcoin has this very memeable quality, which is it is hard capped. Like, that is the number. There's no second guessing it. There's no changing it. There's no adjustments. Do you think people feel that when you start tweaking with the numbers, you just end up going down the same route that other people who have managed money will go down, whereas Bitcoin's this hard asset which no one will mess around with? Maybe you can speak to that, and maybe even some of the challenges that you foresee for Bitcoin, because I think that's relevant too.
I was actually just gonna I'll just do next week as my breakdown on Bitcoin, because spoiler everyone, that 21 million hard cap is going away at some point. It's going away. Either that or Bitcoin's going to go to zero, or maybe both, because it'll change it. Then people will be scared that it changed it, it'll go to zero. We can talk about that next week when I have more time. But important to note that this change does not affect the Ethereum monetary policy outside of it. It impacts the amount of ETH that's burned, right? So like Ethereum's monetary policy adjusts based on demand for block space, right? That's how issuance is done. This, I guess, technically would, because you're not burning as much, therefore like it is inflating more, but it's still nominal compared to basically every other ecosystem you have in this entire or every other chain you have in this all these ecosystems, right? Inflation even today is like 0.7%, whereas like Solana is like 4%. Bitcoin, even with its subsidy, is more than that. Like, so it's, you know, all relative. I think my argument for why they should keep it the way that it is and continue to expand it is because, one, Ethereum needs to continue to capture execution, and it needs to continue, like, this benefits both of these people. And because those L2s ultimately have the optionality to leave, right? So like if you don't expand it, then you're only going to get less and less and less that actually use the thing. So like just continue to grow it, continue. Like, you don't want to like force the weird, awkward situation where these L2s that were very close to using it and get leading to ultimately burn, leave because they have no choice. They have to leave. Like, you don't want to lose those people. So like grow it in favor of them, and yeah, just continue to proliferate ETH as money, which is the meme. And that's going back to the other thing. That's the other thing. And this is actually segueing into Solana really well, because there is no proper way to actually value these networks. No one knows how value accrual works. No one knows how to measure actual value and what something should be worth. People are trying to do that based on like revenue, is what they're like. Revenue for us is transaction fees or burn or whatever. So they were saying ETH is a good asset because it has a lot of burn, but there is no, like, is that valuable? How much is that worth? Whatever. So that's why people want burn, because that is a tangible thing that you can quantify to say that ETH is worth X because we have Y burn. But the other side of that we're actually doing here, if you expand this and get the moneyness of ETH, is you can't quantify it, right? It's just more ETH in more hands. How much is that worth? How much is store of value of that worth? You don't know. It's hard to quantify.
Love it. Look, that's a fantastic discussion. Key takeaway is next week we're going to be seriously flooding Bitcoin. So the Bitcoin maxis are going to be scared of that. Interesting take. Look forward to that next week. Second part is Solana thing. I guess that does segue into the next part where we want to talk about Solana's I wouldn't say outperformance, but their metrics being way higher than all of the ETH ecosystem. Because when you're talking about pushing teams away from ETH L2s, if you make the blob space too expensive, if it's too annoying, where are you pushing them away to? Of course, you might have other options, but I guess Solana is one of the most promising places at the moment. And we've seen teams being quite public about moving away from ETH in order to go over to Solana, which they view as maybe more helpful at the moment as things stand from a business perspective. For whatever reason, maybe the centralized aspect of it makes it more helpful. I've seen that argument made. But Brad, take us into the next headline, which is that Solana does more volume than the entire Ethereum ecosystem in the last 24 hours. I'll pull up the stats from DeFi Llama, but what have you got to say when you compare this conversation with the Solana conversation? Brad?
Yep. Okay. Good. I was saying you cut out for me, so of course you probably threw to me in that 25 milliseconds. Okay. Anyways, so the breakdown is yes, Solana as a chain did more volume in DeFi on Stexes, whatever, than Ethereum plus all of its L2s combined for 24 hours, right? Okay. Why is that significant? Well, one is like it's always good to be a winner, right? So it's just a bullet point, a feather in their cap of like why we're better than Ethereum. And the Ethereum community broadly has always just said like Solana flipped Ethereum directly in volume a long time ago, right? And we could just say volume here is like a form of like capital efficiency, right? Because Solana has lower TVL broadly, but it does more volume. So for every dollar that's on Solana, it is transacted more. There's a lot of velocity there. But the thing was, Solana flipped Ethereum. Everyone said, well, Ethereum technically is Ethereum plus all of these L2s. And now Solana flipping both all of that stuff, like that is the ecosystem. It gives it a feather in its cap. The big thing is again, I talked about value accrual and how you measure value of these ecosystems. There is no right answer to that. One of those things obviously can be this, but it's not the one thing that you look to say like this thing is worth X because volume is high. But it does show, again, velocity. It's one of the things that is very good for the ecosystem. We're currently leaning into now, instead of like direct burn, you're seeing two metrics that came out recently from John Charbonneau and Blockworks is proliferates them is TEV, which is total economic value, and REV, which is the revenue of the chain, and saying like, okay, maybe the value of a chain is determined not only by its TVL or its DEX volumes or its whatever, but all of the actual revenue and all of the financial activity that takes place on top of the thing. Maybe that's the best thing that can help us approximate the value of a chain. And when that comes to check here, we looked at Solana this last week. It actually reported its highest weekly close of total economic value that took place on the chain. And this is, obviously a green shoot of that, where DEX volumes just yesterday was through the roof relative to the rest of the chains. So yeah, it's just broadly, it's just a good thing, good isolated data point that you want to look to. It's something that's bullish for a general ecosystem. Doesn't give you any direct answer of what it's worth.
I have a quick question. I'd love to get your thoughts on this, but you talk about sort of valuing chains based on their revenue or those kind of metrics that traditional businesses are probably valued by. But do you not think that like the value of a network is typically valued by the number of nodes in the network? So you look at like Moore's law or like Metcalfe's law in terms of valuing it. Do you think that using the model to value telecoms businesses or things like that would be more appropriate for networks, given that it's kind of, if you have more people participating in a network, then ultimately there's more value because there's more touch points that people could then transact, and there's more activity, and ultimately that kind of increases the overall value of a chain.
So like you're saying nodes here, but nodes in this sense, like there's the literal nodes that run a chain, right? Like that doesn't actually determine the value of a chain. You can have a 1,000 fucking nodes, but if no one has $1 on it, then who gives a shit, right? It's not actually worth anything. So like there's the literal nodes that actually like run the chain in the validator sense, and like, okay, that has some value, right? But like, can you determine the value strictly on that? No. And then in this sense, nodes in the economic sense is probably like traders, users, like actual individual people that are participating in your network. And yes, in that sense, yeah, you can derive value from it. And like you saw in the A16Z crypto report, they try to value the actual amount of participants that were taking place in the actual, right, in crypto. I think they said it was like 30 to 60 million. So like economic nodes, people, users participating. Yes, that people try to use that to quantify it, but again, there's no perfect thing because blockchains and crypto broadly is just such a nascent thing that you can't, like, no one knows how to define this stuff. So we're literally coming up. I did a tweet last week where it's talking about, I used to be big into baseball and sabermetrics back in the day. And it seemed like every other week there was a new metric that came out that, like, this is the way you value a player. This is what they're worth, whether it's their wins above replacement or their ERA plus or whatever. Because like everyone with a fucking computer could come up with a formula that came up with their metric, and that was the proper way to value something. And we're kind of in that age now with blockchains where it's nascent enough that no one knows how to value this shit, but it's old enough that we're kind of got an idea of how to value this shit. And like we're seeing trends, right? So now we're starting to see a lot of these iterative statistical data points coming forward that are a combination of other things, whether it's users or economic activity or tips or MEV or whatever, that kind of can boil down what these things are worth into single data points. But ultimately, you have to take multiple. Like that's just how it works.
And I think, like, I look at so when I used to work at EY, I used to engage valuations businesses quite a lot, so valuation department, and they would talk about adding discounts or premiums based on certain metrics. And I think the stuff that you mentioned there around like the MEV, the decentralization of a chain, like you could apply those discounts or whatever to those to try and arrive at something that you think is more accurate for evaluation. And it's something that I've always thought about, because I agree, like it's very hard to look at those revenue metrics, fee metrics, even user metrics to work out, okay, well, which chain is more valuable? And I think it's just so many different variables that you put together in some equation. I just don't know what that equation is at the moment.
Exactly.
Interesting stuff. Very, very important conversation on relative valuations. Just a final point from a statistical perspective to give you a sense of what happened over the weekend. Solana's weekly change in terms of volume going through it was up 40%. So like absolutely rampant over the last week or so. And I guess that is the trend we've been noticing, right? Solana obviously attracting a lot of attention and activity.
Actually, just on that attention and activity. So I don't know if you guys saw Solaria. It was like the DeFi kingdoms boom and doom within 24-hour period. And I don't know if that's
was it?
Well, I don't know how much. Yeah, it's supposed to be DeFi kingdoms, but
name only, I guess. Yeah.
Yeah, people bought into it, then lost a lot of money immediately, and that was like in a 24-hour period. But
well, adding to the attention, adding to the activity. Yeah, that was a quick rise and fall, I think. Look, we've only got 7 minutes left, Sam. I want to give you a chance to speak to the Stripe $1 billion acquisition of the platform Bridge. So what exactly is going on here? Who's Bridge? Why is Stripe acquiring them? I think it'd be good to give people a 5-minute breakdown, or we can talk about it for 5 minutes or so.
Yeah, so I mean, Stripe, everyone's probably familiar with Stripe. It's a payments processor. I think they do about 800, or in 2023, they did 817 billion in total payment volume. Bridge effectively allows people to accept USDC payments or like crypto payments. So the acquisition is obviously them kind of fulfilling where they want to go in crypto. So Web3 kind of bolting that on. And there's a lot of opportunity with that could effectively plug crypto in. So I think that's why it was relatively big news. The 2 points that I probably want to lean into, we talked about the acquisition amount, and I think someone mentioned that they think it was the largest acquisition in crypto history. It's not quite the case. There have been some more above that. And at Galaxy Digital, I think in 2021, they bought BitGo for 1.2 billion. That was like a digital asset custodian. We've seen Lightspeed Ventures Partners, they acquired the FTX US assets for around about $1 billion. I don't know what the actual disclosed amount was because it wasn't said, but there have been some pretty big acquisitions previously. But yeah, it is one of the biggest. So that's probably just 1 point to note, and that's why it's notable. The other point is that it's kind of connected to, so Stripe has been partnering with Coinbase, and we're seeing more and more of this. We touched on the whole layer 2 debate, like all this activity that's happening. Base is obviously Coinbase is layer 2. There's been a lot of activity going on there. You look at Aerodrome, which is like the I guess the leading DEX on Base. We touched on them last week. They went past $1 billion TVL. I think it's up to about 1.4 billion now. But my point here is there's been a number of institutions that are kind of pushing down this base route. So, and I think we're only going to see more of that. And I'm actually writing a piece on Lloyd's of London, which is the biggest insurance market in the UK for bespoke insurance products. And they've got products that are coming on chain, and that's via Base as well. So we're seeing a lot of this happening through Coinbase. And I think if we think about the medium to long term, this is something that I'm definitely got my eye on. In the short term, we're going to see this like other chains kind of come to market with like explosive interest. But I think long term, it's just been steadily growing. And not necessarily getting the coverage that it needs to. So I think for me, like the acquisition size for Stripe and Bridge is huge, but also the activity and the choices that these institutions are going through as a trusted custodian or Web3 partner seems to be Coinbase and their L2 base.
Yeah, an interesting point on that. So I didn't know about this specific partnership, which is very interesting. As you say, Coinbase seemed to be striking a bunch of these partnerships. Remember last time when we reported on Coinbase earnings, I didn't know, for example, that there is an official commercial relationship between Coinbase and I was going to say Stripe and Circle, for example, for USDC. And I think those types of relationships are pretty important in a way, right? Like if you think about why it is that you end up using more certain stable coins rather than any others, maybe people don't even think about it too much. Like, why is it that people in the West use USDC more than USDT? It seems to be the case that that's where we gravitate towards. But I'm sure that if circles strike up these commercial relationships with a bunch of the places which act as distributors almost, or the places that are going to list them more and make them more prominent than maybe USDT, like that's part of the reason why. So striking up these commercial relationships and seeing how those are getting done, I think is very important. And then I guess this is just confirmation of the general vision of what people have for crypto. One of the best use cases for crypto has always been international cross-border payments. And I believe this is what, who was it who said this? I'm going to read what someone said related to this Coinbase and Stripe partnership, and then I'll figure out who said it. They said, crypto is the future of money because it is unrestricted by international borders or banking hours and reduces both friction and fees for users. These three key integrations lay a strong foundation for Stripe and Coinbase to begin building a better payments future for users around the world. That was Coinbase who said that. I do think in some way this is just the complete replacement of banks, and we spoke about how we want to have a banking partner in future. Like when you go to sports venues, you see them being sponsored by banks, right? You see people wanting to put their brand and associate them with sports teams and things of that nature. I think we're basically seeing the replacement of traditional institutions for the ones that are going to be more agile. I just saw a tweet from Ovi, who's a fellow Londoner, saying this morning, saying another bank blocked him in the last 24 hours. And it's just like, how long can you just keep operating with banks in this way, where you just keep getting blocked, keep trying to move your own money, keep trying to make, a cross-border payment, and it's just taking you hours and hours and hours when you truly realize what it's like on the on-chain side, where it just, you do it in 10 seconds and it costs you a couple of dollars. So that is the vision moving forward. I think we are coming towards the end of the show. Guys, any final reflections, any key points? Brad, looking forward to that Bitcoin FUD segment next week. Anything else?
I just wanted to comment on that as well, because that's always concerned me about Bitcoin being hard capped, and then all of a sudden you have all these nodes trying to compete for rewards and they kind of go away. And that's always been like the puzzle in my head. I'm just like, well, what's the solution? Does Bitcoin just suddenly shut down in like 50 years? So yeah, I'm definitely going to be dialing into that next week.
Announcer's voice, it shuts down. It'll fuck up. It'll fuck up. My comment. Go ahead.
No, go.
I was just saying my comment on the Stripe thing and like that little post. I think it's a false dichotomy to say that like crypto is the new money, because like, yeah, you can just use crypto rails for USDC, then old money is the new money just with crypto rails. So like it doesn't really work that way. So yeah.
Okay. Love it. Guys, that is our show for today. Thank you so much for joining us. As always, we do this Monday to Friday, 7 a.m. Eastern time for 1 hour, live on X video, live on the YouTube stream too. Have a wonderful day. Thanks so much to Brett and Sammy for co-hosting today. We'll be back tomorrow, same time, same place. Have a wonderful day. Goodbye. See you later.